Hello and welcome to this conversation series on money control pre-budget. I have with me Nomura's capital goods analyst Priyankar Biswas. Priyankar, thank you so much for your time today.
Thanks, Eva. Glad to speak to you.
Especially before the budget, Priyankar, all the anticipation in the market seems to be setting into capital goods sector. What do you think? Is the budget going to disappoint or going to surprise us on the upside?
See, if, from the way I see it, budget is more from an infra angle for us. So, in a sense, like the key drivers always have been like the roads, railways, those sort of stuff. That is how we see it. And in one of the cases, and we had actually put that out in our thematic report earlier, that we do expect a sort of a disappointment as far as roads are concerned. So that is one area we are not really that constructive on. For the other parts, maybe we'll have to see if government does how does the government allocates for the PLIs and the other incentives. So that is how I put it. We of course expect that strength will be there in railways and this Jal Jeevan mission ahead of the polls. So this is the last budget ahead of it. So do expect strength in that.
Okay. So, what is your concern with respect to roads? Because roads has really done the heavy lifting in the capital in this sector over the last few years. What is your concern?
So the concern is like if you look carefully at this year's number, so I would go by the budget estimate that was put out, and if I add the like the total spend, so including the thing called the IEBR, that is the internal external budgetary extra budgetary resources. So if I put that, the allocation for the budget estimate was up only 1% YOY. And then if we track that how the progress has been as far as construction and awards have been, so it has been lagging the trend levels over the last 3 years. So that has been kind of a concern that there has been sort of a semi go slow approach. So eventually when maybe the revised estimate comes up, probably due to the material price inflation, you may have a higher RE revised estimate. But we have done this work that every the budget before every election year, you see a sharp dip in road awarding. So that is the concern here. So this is not the so this is not like we are saying that it's a structural thing. So it's like every election, like be it FY19, be it FY14 and 13, or even FY9 for that matter, you see like awarding goes down materially. So that is what we had highlighted.
So, is that to do with roads or is that to do with in general capital expenditure?
So in general capital expenditure, we do not always see that trend. So in roads, a lot of the ordering typically tends to happen very heavily in the second half, and more specifically in the fourth quarter. And it so happens that our elections happens around May. And so
Hmm.
you have this model code of conducts, and the government uh, kind of being in a sort of a lame duck situation, if I may use the word.
Yeah.
So in which case the ordering does not happen. So that's the heavy part of the year. So that is one of the reasons why it usually happens, and it takes some time even in the next year to pick up as the new government and the new ministers as they are changed and those settle in. So that has typically happened.
Sure. So, if you look at the overall capex by the government last year, obviously the markets were very happy because there was significant increase in the capex budget. What is your expectation on the big number this year?
See, last year I would just correct it there. So when you are saying that the big increase, that is from the gross budgetary support. So
Right.
that had shown a large increase. But if you look at the underlying numbers, if you take into account the this
Public sector
IEPR
and
angle,
central. I think that was
yeah,
disappointing. Yeah.
if you see that, that's only an 11% growth. And if you
Correct.
take
Correct.
that inflation factor into account, in real terms, it was not a very large growth.
Right.
So
Right.
I won't say it was that that gung ho. I mean, in that sense, I would say that.
Yeah. So what is your expectation this year?
So we expect that the railways and the this Jal Jeevan mission, so it comes under the Ministry of Jal Shakti. So that spends will remain steady, and due to the inflation factor, may even go up materially. So we haven't put out any estimates, so can't say on that. But directionally, we expect that to go up. In case of roads, while due to the inflation factor, the what we expect is that the kilometer wise the awards will dip down. And so, as a consequence from the revised estimate to the budgetary estimate of FY23, we may not see a material jump.
Okay. So any particular sectors within capex that you think will dominate? One, clearly you said railways. Anything else?
So, railways and of course water. So, in the Jal Shakti,
Water.
because the
Yeah.
government is quite pushing on that front. Another sector that had some tailwinds earlier was defense, but and that has to do more with indigenization rather than the government spending on it.
Yeah.
Because what
Yeah.
has happened is initially the spend levels were higher in this year, but if you track now the spend levels, so we are talking about the capex part, not the revenue part. So the capital part has increased in single digits actually. So it has more to do with indigenization rather than the government absolute spend so far, it seems.
No. So in terms of the government, I'm saying, is there any other chunk that you see that will be a good trigger in terms of public expenditure? Where do you see focus apart from railways and water?
So what we are saying, probably transmission is another area that we are positive on, that we have highlighted in our strategy as well, that this
Power
is one
transmission.
area. Yeah, power transmission, I meant. Yeah. So this is one area where we expect that the government thrust to increase on the capex front. Of course, these are not exactly done by the government, but more by the agencies out there. So it's more of an IEBR angle, if I have to put it that way.
Hmm.
And the government has already recently put out this 500 gigawatt integration roadmap as well. So that kind of highlights that there should be like an uptick in this space, this particular
Okay.
area.
Okay. And when you look at the private sector capex, do you see signs of that building up this year?
So the private sector, we have to see it a bit independently. So for instance, we had put out a small thematic on data centers as well, like putting out projections and how it will go out. So this is one area where we had actually upgraded our estimates. So for example, we were expecting like 1 gigawatts of data centers by uh, like 2025. Now we expect that by end of 2024. So there is a lot of momentum happening, and to a large extent, I mean to a great degree, it has to do with the government push on it as well. I mean this like you have to keep the data here, I mean the localization of data,
Yeah.
and then of course the 5G deployment. So that is one thing that the government pushed for, so to promote industry 4.0. So this type of initiatives can actually encourage, and this data center capex is entirely private. So that is one big area that we are seeing. And then the government has also announced on these hydrogen missions. So let us see whether, because in the roadmap that the government has announced in January, so they have highlighted that probably in FY24 they will highlight the schemes and incentives out there. So let us see that in the budget what they provide. So that can be another private capex areas, and some corporates particularly have committed in their long-term plans on those.
Right. So all these new areas will be the trigger you're saying. How about the traditional industries? Do you see any uptick there?
The traditional industries, what we are seeing is more on the efficiency and the productivity side of things, more on the automation and those side of things. So in terms of if you ask me like the hard capex, that is still yet elusive.
Fair enough. So, from a listed stock universe point of view, if you just put make a growth versus valuation matrix, what pockets look good to you?
See, we cannot discuss individual stock specifics, so maybe I would prefer a sector color over here.
Mhm.
So what has happened is, of course, sectorally the stocks have delivered. That goes without saying. And most of the universe, so I would say, like the efficiency plays that I was highlighting about, the automation digital plays, so they have on an average witnessed order inflow growth in the last year of close to 30 odd percent. So that is what you have seen. Of course, there was a favorable base effect impact as well, and an inflation component within that. So material prices had gone up anywhere between 18 to 20%. So that sort of growth sustaining in the next year is a bit difficult. Of course, the valuations are where they are, so effectively a lot seems to be factored in, kind of.
So, despite a better year, you don't see stocks delivering to growth this year. Would that be correct?
See, as far as revenue growth and those things are concerned, that is largely a function of the existing order book, honestly.
Correct.
But
And
again,
you are already
I am speaking
anticipating
of
that,
from
you
an
know,
order
if
inflows.
awarding for next year is going to be weak, for example, in roads, that is going to get reflected in earnings for, in FY25 onwards, I guess, which means stocks will start to discount that slowdown sometime in the course of this year.
Yes, probably maybe in the later parts of the fiscal, that should already start factoring in when you witness the actual slowing down.
So would you expect this year to be an year of consolidation from a stock market perspective for capex, capital goods sector?
You mean from an order inflow growth point of view? Yes.
From a stock price performance perspective.
So of course, as I said, we can't really comment on the stock price performance. So that's as per our company policy here.
Oh, okay, fair enough. Anything else that you are particularly bullish on? Any pockets of value that you see in terms of sub-segments within capex, within capital goods?
Yes, so we are bullish on certain subsegments. So as I was highlighting, transmission is, I mean, not the distribution part. So the transmission part we are quite bullish on, and transmission, along with, if you have plays which are parallel into railway safety and signaling and those, so that is one area that definitely warrants look at. That is one area that we are in particular positive.
Sorry, I missed that.
So I meant like companies in transmission, because transmission ordering was kind of weak for the last 5 6 years, sort of.
Hmm, hmm,
Now we
hmm.
are seeing, now we should see the uptick in that. In many of the companies, we are already kind of seeing order inflows coming through, and we expect that this trend will be maintained for some time, at least for
Oh,
the next few years. So this
okay,
is one area that we see that the growth momentum should be there,
okay.
and probably the margins also improve as the commodities also start correcting. I mean,
Sure,
from a YOY level for
sure,
the full
sure.
year.
And how do you see overall, what is your expectation on margins for both infrastructure companies and capital goods?
See,
Because the street seems to be quite divided in terms of, commodity prices itself. There is such a wide divergence in terms of expectations on how global commodities is going to move this year. So I guess that will have a huge bearing on margins.
so you had the maximum commodity prices in the last year. So and the commodity prices actually sort of accelerated big time. I mean, over this April, May, and June periods in particular. That leads to this FY having significantly higher commodity costing versus the previous FY. Now, in case of companies which have secured a lot of orders during this so far this year, so they should tend to benefit, because what has happened is there was a commodity correction also. Now, of course, with China reopening up, things are also moving up. But for the full year, whether the commodities will be higher than the previous year's average levels, that seems the probability seems a bit low. So in that sense, I believe that there should be some commodity benefits, especially players who have some fixed price contract nature in their order books.
Fair enough. Okay, what is your expectation from the budget, and what do you think will surprise the markets and what will disappoint the markets?
So we have not really put out any budget estimate sort of thing, but I had given you some general directions. So in a sense, the roads can be a disappointment. So that is one thing that we kind of expect, and that may probably play out over the next several months after the budget, probably with the order inflows not coming in. So that's one thing. We expect that the water and the railway water capex can actually increase. So that is what I think can be like a significant positive. And transmission, see, the point is it is given as an IEBR segment. So I think there would be increased allocations on that as well.
Okay. Okay, that's all from me. Thank you so much,
Thank
Priyankar.
you. Thank you so much.
1st February 2023, the Finance Minister Nirmala Sitharaman will present the last full union budget before 2024 elections. India's most awaited financial event comes in the midst of global slowdown, inflation, liquidity tightening, geopolitical tensions, and re-emergence of COVID-19. Will India look to fire up its manufacturing? Will India build a moat against global uncertainties? What will the budget have for the middle class? Watch the complete coverage of Budget 2023. Real-time analysis, expert takes all day on Moneycontrol. Log on to www.moneycontrol.com for more.